So it's inevitable that the property market is going to crash, and it's also inevitable that a broken clock is going to be right at least twice a day, because at the end of the day, without a shadow of a doubt, you've seen all these sensational headlines of what the property market is going to do, and the reality is none of us know for certain what's going to happen in the market. We do know for certain it will crash. Markets go up, they go down. The timing of that is what we don't know. So this is the June property market update, and in this what I'm going to do is show you some statistics of what the market's doing, so you've got a better educated guess. But what you want to be doing in property in general is not making your decisions based around what the market's going to do. Base them decisions around solid investment assets, depending on where you are in your journey. This is what I go into when I talk about my property delta matrix. You can find more videos on it here because I've talked a lot about this over the last months. So in this video, all we're going to concentrate on is the data from the market, so you can educate yourself a little bit more. But in the meantime, while you're still here, please do me a massive favor and smash that like button and hit that subscribe. So let's get into this property market update. But make sure you stick around to the end, because at the end I'm going to share with you a £400 bonus that the government are giving out that everybody can claim. Maybe 650 for some of you if you meet the criteria. So make sure you stay around to the end to get your £400 grant gift from the government. So the property market has been defying gravity a little bit. With the cost of living crisis going on, we still had a breaking record property market data coming through. So for the first time, it's hit over £250,000, which is just incredible when you think about cost of living's going up, base rates are going up, all these pressures on the world, yet the property market is still performing. Why is this happening? Because a supply and demand issue. There still is a low inventory of properties on the market. All of the major portals are reporting this, and this is the main driver behind this. But Zoopla's reporting both the time taken to sell a house and the number of properties selling for a discount has increased, but house prices are still not falling. So you're showing signs of this at the moment. It has reduced year on year. We are still getting growth, but that growth is slowing down. We're also getting more supply coming onto the market, and it's taking a longer period of time to sell. So this is why the big headlines are saying it's about to crash, we're at the peak, but none of us know for certain. But again, one of the things you want to be looking into is your price per earnings ratio. So let's have a look what Rightmove's index is showing. So this is really interesting in the affordability trends. I think this is what you have to keep an eye on when you're getting sturdy investments for yourself. So what you want to look at is the affordability. In areas where the affordability is really wide, these are the areas that are much more vulnerable, in my opinion, to the cost of living and all these different crises that can go on and job losses, etc. When the affordability is more in line, this is going to help support the area, especially now jobs are spreading across the UK with remote working, people being able to commute into major cities just for a few days a week. This is really changing the demographic and the leveling up of the playing field, which the government's policies are to push more industry into the north. But if you have a look at these charts, the average rent is pretty much around the average mortgage price at the moment. And when you look at this affordability for first time buyers at 4.5 times the salary, that is really going up ridiculous, above that $750,000. And that's with a 2-time salary at 4.5 times. And when you look at 4.5 times with one person's salary, it's under 125k. Again, I know I keep on going back to this, but this is why I feel areas where the price per earnings ratio is in a line, like in Stockton-on-Tees, for example, the price per earnings ratio is really in a line to what the average house price is. It's around 30k a year, and the average house price is around 130. So it's not, the multipliers in proportion. So I wouldn't worry too much what's going to happen in the markets if you're in areas like this. Go Compare have got this great sort of stats laid out on the salary to the UK homeowner. So you can go on this Go Compare. If you go onto flats, it'll tell you in London what the salary is needed to buy a home, and which are the most expensive areas, the most affordable areas. And you can see, look, Middlesbrough, 15k is the salary you need to buy there, but that's for average flat. If you go into terrace houses, if you go into semi-detached houses, it tells you these averages in each of these areas. So if you're basing this on an investment point where the affordability in line with the work is, that's where it's important. So if you go into plumb, not point, not centre, on plumb plot, this will give you the average in the area. So you're thinking to invest in an area, have a look at the averages. So we can see Middlesbrough, you need 15k to get the average flat. But you can see what the average salaries are in Middlesbrough, in Redcar, in Stockton-on-Tees. Stockton-on-Tees is my area, which makes really good news for me. The average salary is 33k. But we're talking about investment and property, we've got to talk about the rents. And one of the things that's gone under the radar quite a lot for me is the rental increase. The rental market's been on fire. Usually when you get an increase in property price market, like capital appreciation, the rents usually get weaker, and vice versa. When the markets get weaker as in appreciation and we're in a bit of a downturn for growth in the market for capital, the rental market usually gets stronger. But both markets have been on fire. And again, it's a lack of supply for both of these markets. I'm not going to go too deep in this because I discussed this in lots of previous videos. But look at the rental stats. Look, so the average annual rent has gone up 9.1%. London's jumped 15%. The reason London's jumped so much though is because it had such a hit in COVID, like it dropped dramatically. So I'm not even sure that 15% is at where pre-COVID levels are, but it still had a massive jump. 11% an average for the whole of the UK. That is a phenomenal growth amount for your rent. So really good news for landlords. But there's loads of factors that's adding to this. There's more regulation, there's more landlords exiting the market, especially old landlords. There's more taxation, so it's getting less desirable in certain circumstances for you to be a landlord, hence less stock, hence prices going up, which could be, again, another reason to. But if you understand this and you educate yourself correctly, you get the right style properties, this is a massive, massive opportunity. So let's go into my views around the market. The cost of living crisis, I do believe we're going to get a slowdown. I can't see us falling off a cliff just yet, just because of supply and demand, the stock that's on the market. TMW are already making the affordability, the stress test a little bit lower, and then they've lowered their rates. So the rates for me, I'm getting actually mortgages at the moment, and the rates, I'm not seeing no real difference. Even though the base rate's gone up, I'm not seeing no difference because the lenders have got an appetite for this sector and they're earning money, so they're going to stay pretty competitive at keeping them rates low. But TMW, one of the biggest lenders out there, have just reduced their rates. So yeah, that's an indication that the rest of them, they want to keep up competition with them. May not, but may do the same. So my views is the market is going to continue to soften. I feel there is going to be a bit more opportunity in the market, but I can't see us getting that massive crash just yet. Will there be a crash? Of course there will be at one point. Will it be right now? I'm not sure. I think the outside market and the world as a whole will potentially go into recession. America's already halfway there. They've recorded their first dip in GDP, so they're already halfway there. I think the rest of the world's going to follow suit with that, with everything that's going on. But I do not believe, I feel we're going to have a stagflation where we're getting higher inflation, but with a correction in the economy itself. So declining economy, but high inflation still. And I feel property prices are still set to inflate a little bit. But make sure you just protect yourself for the downside with this. But as promised at the start, if you're still here, thank you very much. Smash that like button, hit that subscribe. My wife's living my terms. My mission is to help as many people live in their terms, using property, mindset, education as a vehicle to do that. So please share this to as many people as you can. But as promised at the start, I'm going to share with you a little bonus how you can get £400 gift grant from the government for your energy costs, and that bonus is in the form in the description, the BBC article. Read that article, it tells you exactly how the government are giving out £400 grants to everybody, £650 to some people that are on benefits. So make sure you have a read through that, make sure you get your grant, and remember, if you don't evolve your ideas, you never live on your own terms. So evolve your ideas, live on your own terms. Have an amazing day.